Hello and welcome, Mission Winners. Pat Walker here, bringing you the pulse of the market. In today's episode, we're tackling the market split personality with some indices dipping their toes in the red while others are painting the town green. We'll break down the day's biggest movers, dive into crucial economic data, and serve up a chart analysis that you won't want to miss. The major indices closed with slight losses today, with the S&P 500, NASDAQ Composite, and Dow Jones Industrial Average all dipping by about 0.1% to 0.2%. However, the Russell 2000 continued its impressive run, jumping 1.1% and bringing its July gains to a whopping 9.6%. This outperformance in small caps is certainly catching our attention. Earnings season is in full swing, and we're seeing mixed responses to quarterly reports. UPS took a significant hit, dropping 12.1% after missing earnings estimates. NXP Semiconductors and Nucor also faced losses following their results. On the flip side, Spotify, Lockheed Martin, and Sherwin-Williams were standout winners after their reports. Looking at sector performance, materials, financials, and consumer discretionary managed to eke out small gains, while energy, utilities, and consumer staples faced the largest declines. This mixed sector performance reflects the overall hesitation in the market as we approach the heart of earnings season. In the bond market, we saw a slight decline in yields, with the 10-year note yield dropping 2 basis points to 4.24% and the 2-year yield settling 4 basis points lower at 4.48%. This movement in yields continues to be a key factor to watch as it influences various aspects of the market. Now, let's take a moment to look at the year-to-date performance of major indices. The NASDAQ Composite leads the pack with a 19.9% gain, followed by the SP 500 at 16.5%. The Russell 2000, SP Midcap 400, and Dow Jones Industrial Average are also in positive territory for the year. On the economic front, June existing home sales came in at 3.89 million, below the consensus estimate of 4 million. This data suggests that elevated mortgage rates and low inventory are offsetting the typical summer boost in housing activity. It's a trend we'll continue to monitor closely. As we move through earnings season, it's crucial to stay focused on high-quality stocks with strong fundamentals. This brings me to an important segment of our show, a quick chart analysis. Okay, so our key list, the Mission Winners VIP watch list that goes out daily, had several stocks that triggered today. Carpenter Technology Corporation, ticker CRS. Jefferies Financial Group, ticker JEF. KB Home, ticker KBH. Direction Daily Small Cap Bull 3X Shares, ticker TNA. And Goldman Sachs, ticker GS, to name a few. Now, what I wanted to do is show you how we got to the point with Goldman Sachs, what we did, and what we were looking out before today and how we handled it. So let's get into the chart. This is a great setup that I love. I love clean and symbol-based breakouts. Our first buys were in here, okay? Ran up, we sold some into strength a couple of times, guaranteeing profits, which I like. And then it pulls back. And this is where the lesson gets really good. It pulls back on decreasing volume right here. And again, this is a daily chart. I key on weekly and daily charts. Bigger trends are made in these better time frames, daily and weekly. So it does this, and it pulls back on decreasing volume, and it's resting on the 8 EMA. So now what are we looking for here? A pullback, again, on decreasing volume, resting on a key moving average. It could have been the 50-day or the 21 exponential or the 8-period exponential. If it had been falling on heavy volume, that would have been a different story because it indicates more selling pressure. But it wasn't. Selling was steadily drying up. Advance it one day, and we get this igniting bar. And this is where we're at today. Now that's the daily chart. So we're looking at this. I'm going to take it a step further though, and I'm going to show you the hourly or 30-minute chart. And here's the hourly chart. The stock is just going sideways on the hourly. Notice this. The volume was good in here and then steadily dropped off. Very low volume. Lower volume on the daily, low volume on the hourly or 30-minute. And again, this is the hourly chart. It's just basing here. It's just resting, okay? And you can say, well, there was some selling pressure here. Yes, but it wasn't heavy. It didn't even do average right here, average hourly volume. It was relatively low. So it's just basing. What are we looking for? You combine the daily with the hourly, and it helps us find winners. Advance it 1 bar. And this is the first bar today, first hourly bar. And look what it does. There's the base. We'll draw it again. Here's the base. We want to take out those tops, and we want to take them out with volume. Why volume is so important? Volume tells us other people see what we see, and they're acting on it. They're buying. And that's very important. So let's take it and just advance it 1 bar. And this is the first bar this morning, the first hourly bar. It gapped down just a little bit, and then it lifts off. It goes across these tops right here, and look at the volume. They voted on it. And that's what it did. And quiet inside bar, tailing here, and that's where it's at right now. But that is a good lift right there. This is the hourly. Take it to 30-minute to show you the same thing. That's the same line, by the way. The same line is transposed to different time frames. This is the 30-minute chart. Basing, quiet on the first 30-minute bar, and then you get the igniting bar where they voted. That is a reliable trigger to buy. Not up here, taking out the highs of that bar. Right there. Anyway, we're going to go back and show this again. Here's the daily chart. I'll get rid of that line to clean this up for you. Pulls back on decreasing volume, resting on the rising 8 EMA. Fine tune it down to the hourly. Here's the base, and it lifts off on that first hourly bar this morning with volume. Take it down to 30-minute. Clean, simple base. Decent volume here, but then it ignites right there on volume. Right there. I said this at the IBD meetups for years. People talk with their mouths and vote with their pocketbooks. We go where they're voting. Right there. A very important lesson. We don't buy up here. We buy near this pivot. That really helps us. And again, it had volume confirmation. Now that we've analyzed the Goldman Sachs chart in detail, let's return to our market overview. The mixed market performance we've seen today underscores the importance of thorough stock selection and risk management. As we've demonstrated with our Goldman Sachs analysis, it's crucial to look for stocks showing both technical strength and fundamental quality. Looking ahead, we have several important economic reports coming out tomorrow. The MBA Mortgage Index will give us further insight into the housing market, while the flash July S&P Global U.S. Manufacturing and Services PMIs will provide a snapshot of economic activity in these key sectors. We'll also be watching the June new home sales report and the weekly crude oil inventories. These economic indicators, combined with the ongoing earnings reports, will likely drive market sentiment in the coming days. Remember, it's not just about the headline numbers, but how they compare to expectations and what they tell us about broader economic trends. As we wrap up today's episode, I want to remind our listeners that investing success comes from a disciplined approach, focusing on stocks with strong earnings and sales growth and leading industry groups. It's not about constantly jumping in and out of positions, but rather identifying high-quality stocks and letting them work for you. Before we go, I'd like to remind you all to subscribe to our YouTube channel, where we provide daily market insights and in-depth stock analysis. If you found this helpful, please hit that like button, and if you have any questions, don't hesitate to leave them in the comments below. This has been Pat Walker with the Mission Winners Market Update. Remember, invest smart, manage your risk, and always stay informed. Until next time, happy investing.